right, guys, in this video, we're going to talk about credit spreads. Now, we already know how to place a debit spread, and that would just be we buy a call or a put, and then we just sell a further out of the money call or put against that. Now, what is a credit spread? Well, a credit spread is the same exact thing, only in reverse. So what we would do is we would actually purchase a call, and then we would actually sell a closer in the money call, and then same with the puts. We would go over here and we can purchase a put here, and then we would sell a further in the money put, and that would create a credit spread. Now, when we are creating these credit spreads, what are we trying to do? Well, what these credit spreads do, unlike the debit spreads, is that this gives us neutrality in our assumptions. So whereas debit spreads are you're either bearish or you're bullish. Here we have you are either bullish or neutral, or you are neutral to bearish. So it gives us that neutrality in our options strategies and our underlying assumptions. Now, why does it do that? Well, because what we are doing is we are taking the Greek theta, which is our time decay, and we're actually making it work in our favor this time. So what we're doing basically, here's the simply put, in options trading, here's what you want to do. And with anything in the market, you want to buy low and sell high. But with a credit spread or anything involving selling options, you're still doing that. You're still buying low and selling high. You're just doing it in reverse. So you're actually selling it first, and then you're trying to buy it back for as cheap as you possibly can. So if we were going to place a, let's just say we're going to do a call credit spread here, or a short call spread on AMD, what we would do is we would, let's just say, let's take the 87. Let's do this. We'll buy the 87. And then we're going to go in here, and then let's just keep it simple. We'll sell this 85 call, and we're in the month of April expiration here. So we're going to sell this 85 call. Now, same rules still apply. The width of your strikes, right? That's going to be your main key. So you're going to see what your width is, right? Here's 2, so 200. And then only this time, instead of paying a debit, we are receiving a credit. So we're receiving this 33 cents right here. So how do we calculate our max profit and our max loss? Well, our max profit is going to be this 33 cents. So what we need AMD to do is stay below $85 up until April 16th, and we will collect this full 33 cents. We cannot make more than what we're selling something for, okay? So we can only make 33 cents. That's our max. Now, what's our max loss, though? Well, we take the width of our strikes here, and we subtract the credit from it, okay? And then that's going to give us our max loss right here of 167. So what we're doing is we're capping our profit, and we are also capping our max loss. But what we're doing is that we're putting time in our favor. And as you can see right here, our theta is positive. So each day goes by, we are gaining $1.1. Now, what else do we look for when we're playing these credit spread strategies? Well, let's go out to May right here. What we want to do is we actually want to try to collect enough premium in here, and yet we want to give ourselves a really, really high probability of profit. Now, let's just compare a call debit spread real quick with a credit spread in here. So we're going to do something $5 wide, and you can see our probability of profit right now is 45%. Okay. And we have an $8 expected move in here. AMD is trading right around $81. But you can see we are very much bullish in here. Now, how would we want to raise these probabilities of profits? And also, our theta is negative. So we're losing 3 cents each day, and that's only going to get drastically higher and higher. And notice our delta as well. It is very high as well in here. So it's 16. What we can do is that we can still stay on the call side, just for all things being equal. And we can go in here and we can sell, let's just say this 20 delta, let's just do 90. We're going to sell this 90 right here. And then we are going to purchase the 95. Now, what have we done? Well, we created a credit spread, okay? But you can see our max profit is very, very low. So it's only 75 cents, whereas our debit spread, it was much higher of our what we could have made, but our max loss in here is also really, really high. So Why would we want to do this? Like debit spreads, it feels like it's a better risk reward, right? Well, here's the thing. We have theta on our side, but we have our probability of profit. See how it jumped to 78%? So you have a 78% chance of this making money. So with all of options, you kind of have to weigh your win rate with the premium you collected and what's good for your account size. Now, this trade right here, it would not be a great trade because the general rule of thumb is that you want to sell something that has high implied volatility. And as you can see, the IV rank in AMD is very, very low. IV is only 42%. So anything in here, you actually don't want to sell any options in here or sell any spreads because you want to try to collect a third of your width of your strikes. So if you're doing a $1 wide credit spread, you would try to collect 33 cents. And then in doing so, you want to skew your probability of profit higher. So with all of options, it's always going to be this give or take. You know, I mean, you're going to pay less and have a lower chance of making money, or you're going to risk more, making less, but have a really, really high percentage of making that money. So it's a lot of give and take in here. And also you can do these on the put side as well. So when you hear somebody say, oh, I'm in a bull put spread, all that means is that they're in a short vertical put spread. That's all that means. And most of the time people come in and they look right around the 20 delta. So they would be, you know, right here. And we're going to do this credit spread right here. You can see max profit 44% or $44, max loss 206. Like I said, you want to do something with really, really high implied volatility. Let's go to Baidu real quick and see what we're working with in here in April. Don't really like that. Let's go to May. Okay, so May is a little bit better. You can see that we'll do a $5 wide. We'll start at the 20 delta and we'll do $5 wide bull put spread. You can see that we actually have a lot more premium in here to work with. Our IV ranks higher. Our IV is 58% in the month of May. So we have a lot more premium in here to suck out. So that's the goal, is you still want to buy low, sell high, but you want to sell first as high as you possibly can. Okay. Because if I was to sell this for 100, well, I'm leaving 16 cents on the table. So you want to try to sell this for as high as you possibly can, and you want time to tick away and slowly just eat and decay at your options premium. Also, remember, we have all the Greeks inside of our options, and we have IV that's constantly moving, contracting, expanding. In this case, what we're looking for is we're looking for an IV contraction. So not only do we have theta working in our favor, time working in our favor, but we're looking for an IV contraction as well. And we want these to expire worthless or to purchase this spread back for as cheap as we can. So if this spread right now is trading for 116, we can purchase it back at 86 cents and we made $30. We don't have to wait for this thing to expire worthless, right? We can buy this back whenever we want. Same with debit spreads. If it goes up 10 cents, you just made $10. You can go ahead and sell it. It's whatever you want to do, whatever fits your account sizing. Now you can also kind of go in here, and that's the general rule, right? You want to try to sell 20, 15 delta, and you want to try to collect a third of the width of strike. That's your main rule, but you can do whatever you want. So for put strategies, you can actually go in the money here and you can sell this 230 bull put spread. And you can see that you're because it's a $10 wide, you're collecting over half of the premium. So your max loss is lower and your max profit's way higher, but you only have a 43% chance of making money on this. Whereas if we go back to the 195, 190, you can see that our probability of profit drastically increases. And we still have a bullish outlook on it. Only this time we are neutral and bullish. Whereas when we go in deeper, then we become very bullish. And you can see our delta becomes skewed as well. So just a bunch of things to kind of be aware of. I know I kind of rambled on here and kind of just threw everything together at you real quick, but it's easy to understand once you play one. And just kind of understand that you're still buying low and selling high. That's it. That you always want to buy low, sell high. That's the name of the game. You're just doing it in reverse. That's all you're doing. And also, when you're doing any sort of spread, whichever way your short call, or I'm sorry, your short option is facing, that's the direction that you do want the stock to go. So you can see our short is facing upward here. So you want the stock to go up. And if we drag that, if we drag this short put, it's not letting me do that. Let's go here. If we drag that short put down here, you can see that this becomes green and we want the stock to go down. So that's another nice little easy way to like, well, okay, where's my short leg facing? And then you know, okay, it's going this way. And then you can kind of figure out, okay, well, this way is a debit spread. If I do it the other way, it's a credit spread. I'm receiving credit. Yeah, just little tricks here and there. But overall, when you're placing a credit spread, you want to do it in high IV environments, and you want your probability of profit to be high enough to fit your account while risking enough that's a good number to risk according to your account as well. So yeah, just be careful with that, guys. Okay, all right. Thanks for watching. Make sure to check us out on social media. We have attached links to our socials in the description, and we also have a swing trading service if you're interested. There's more information in the description below.